Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are witnessing a structural shift in liquidity dynamics, driven by infrastructure innovation rather than pure speculation. Robinhood chain has officially launched on Ethereum Layer 2 infrastructure, triggering an immediate surge in decentralized exchange activity. Daily volume on the platform has skyrocketed to $811 million, a figure that underscores the growing demand for Ethereum as the foundational gas token. This influx of capital reinforces the bullish case for ETH, positioning it not just as a store of value, but as the critical settlement layer for high-frequency trading applications. The market is clearly pricing in the utility of L2 solutions, with Robinhood's success serving as a bellwether for institutional adoption of decentralized finance protocols. Meanwhile, the artificial intelligence hardware sector is undergoing a rapid strategic realignment. Boundless, a key player in zero-knowledge proof infrastructure, has executed a pivot that signals changing priorities in compute demand. The company is repurposing 4,000 GPUs from ZK proving tasks directly to AI inference workloads. This move is not merely operational, it is financial. By shifting resources, Boundless has slashed its operational costs by 50%, improving margins in a capital-intensive industry. This pivot suggests that inference demand is outpacing proof generation needs, forcing competitors to adapt their hardware allocation strategies to maintain profitability. On the macro front, the Federal Reserve's policy path is being recalibrated by fresh inflation data. The U.S. June Consumer Price Index fell by 0.4%, a significant decline that beat analyst forecasts and cooled the probability of a late July rate hike. Core inflation metrics also showed signs of easing, reducing the urgency for aggressive monetary tightening. This data point is critical for bond yields and equity valuations, as it lowers the cost of capital for growth stocks. Investors are now repricing their expectations for the terminal rate, with markets pricing in a more dovish stance from the central bank. Corporate earnings are reacting to this macro environment with mixed results. JPMorgan Chase, TSMC, and NBIS reported earnings that drove significant pre-market volatility. JPMorgan's strong balance sheet provided a stabilizing force, while TSMC's guidance highlighted ongoing supply chain resilience. NBIS, however, saw sharper declines as investors digested the cooling CPI data against their revenue projections. The S&P 500 reacted with caution, reflecting uncertainty about whether corporate profits can sustain growth in a lower-rate environment. In related news, the crypto derivatives market is expanding geographically. AFX, a new sovereign Layer 1 blockchain, has surpassed $1.1 billion in trading volume just 1 month post-launch. The platform is targeting Japan's APAC market with specialized infrastructure for perpetual futures. This rapid adoption highlights the demand for compliant, high-throughput trading venues in regulated jurisdictions. That's your market briefing. Follow Rumour with AI for daily market intelligence.